And with me is my colleague Mangalam Malu. Hi Mangalam, good afternoon. But before we get started with mutual funds, anything in the market, I think there's a bit of a spike coming through.
Absolutely, Sumera. It is a good afternoon indeed. We're at the high point of the day for all the frontline indices. The Nifty at the high point of the day, sitting with a 0.6% in terms of gains. We have big moves coming in on individual mid-cap stocks. In fact, the mid-cap index is the one which has gained a fair amount of steam in the last 15 odd minutes. And there you have it, Apollo Hospital and Allahabad Bank, both of them up about 9% each. We have Dalmia Bharat too, up around 4%. So individual stocks, they are doing fairly well. Lower crude aiding the cause of a lot of stocks and individual news pieces too. But first up, all the top stories that we're tracking this afternoon before we hand it over back to Sumera. Market at the high point of the day, boosted by a surge in banking stocks, IT and auto stocks too. Bad for the bulls. Mid-cap index picks up pace to trade in line with the frontline peers. Jet Airways extends its rally on the back of a CNBC TV 18 news. Reports of a deal with Tata Group's Vistara Airlines. Sources say Tata Sons chairman Chandrasekaran is keen on the deal. The Tata Sons board is set to discuss the proposal tomorrow. Big moves coming in private financials. Yes Bank takes a sharp knock after part-time chairman Ashok Chawla resigns. The Ujjivan stock rises as management confirms to CNBC TV 18 and confirms the CNBC TV 18 news that they may consider issuing shares of small finance bank to existing shareholders when it lists. All right, meanwhile, we have to cut across. Anand Mahindra is in conversation with our colleague Utkarsh.
So two questions. First on the dealership. Let me tell you that when we started the journey, we needed to have X number of dealership based on the business plan. And like any other company, when do you start your dealership? When you show them the product, you tell them the pricing, you tell them your promotion and marketing budget, your sales volume, that's when dealers sign up. Imagine, like Anand said, imagine this brand where I have not shown them the bike, I didn't tell them the pricing, they didn't know what it will look like. Will I make a good job or a bad job out of it? But just given the fact that it was Java, I had 105 dealers signed up and we had to put a stop. Each of these dealers is going to put anywhere between 1.5 to 2.5 crores. So you can imagine the amount of capital or nostalgic capital or residual capital this brand has. Then there are people who are willing to invest behind this brand.
Without seeing the bike.
Without seeing the bike. And the second important thing is when the bike comes and a customer buys, because these guys are willing to invest, he not only gets the buying experience or the retail experience, he gets a service backup, which is very critical for so everything fell into place. So 105 dealers across the cities, and that's what we've gone with.
Anand, speaking about the relationship between Java and Mahindra. Mahindra has been into the automotive industry for a long time. There are a lot of learnings and there are a lot of synergies which can match. How has that gone through with Java and the classical Mahindra automotive team?
Well, in fact, Anupam can expand on this, but there have been enormous synergies. What we've got this time is a wonderful congruence of assets. You have a man who's been an entrepreneur, who's in fact revived a retro brand, done it very successfully, created the template for it, and is today a private equity player and therefore an investor. So he owns a 20% stake in the company. Then you have Baman Irani, who is from the family that brought Java to India. So you have authenticity and credibility and passion to resurrect this brand. It gives it a genuineness. And then you have the entire ecosystem of Mahindra to back up that passion and authenticity. You can have passion, authenticity, but if you don't have the means to be able to create a bike, manufacture it with quality, bring into play your procurement ecosystem, the odds for success would have been lower. So this is a wonderful sangam that we have seeing over here of all these forces coming together, which is why we are so optimistic about the success of this.
So Anupam, is the aggressive pricing due to the sourcing capabilities of the whole Mahindra group?
So I think bike is first engineered to cost. Yeah. Right? I think there was a gentleman, Mark, who designed an engine, he also said, when you have an engine, if you really want to push it to its limits, then the tolerance level required, the material required, the technology required is something. But here we wanted to go with the character. So to first answer the question, this bike was engineered beautifully. It is not a badging job. That we had a product, we had a bike, we had something and we badged it. We made it. The second part of it is, of course, dealing with so many vendors, both commercial negotiation, getting vendors on board, technical negotiation. That's a machine. That cannot be created by just money or time. It is money, time, experience, loads and loads of failure modes, and then you create a nice sourcing team.
All right, so that's the Jawa Motorcycles for you. Wow, looking good, Manoj, wouldn't you say? And this almost makes you wonder if the SGs are going to come back, right? Another bike from the same era.
Yeah.
But let's talk about reviving portfolios then. Outlook Asia Capitals, Manoj Nagpal is my guest this afternoon. So let's get started. Our first query comes in from Mr. Jagannath Kumar from Andhra Pradesh. He has investments in the SBI Dual Advantage fund, as well as that's the 25 series HDFC Midcap Opportunities Fund, and he wants to know, Manoj, now what he should do with this. Should he remain invested in these two funds? Okay, I think he's on the line with us. Mr. Kumar, hi, can you hear me?
Good afternoon, madam.
Good afternoon, sir. Go ahead. What's your question?
My question is, I have two mutual funds. One is SBI Dual Advantage Fund Series 25th regular growth. And HDFC Housing Opportunities Fund 1140 days fixed growth fund, and I want to add 1 lakh each in HDFC Small Cap Fund and L&T Mid Cap Fund. Is it right time to enter?
Sir, are you, besides the two funds which you mentioned you already invested in, do you have a portfolio of other funds, or is it just the two?
Already I have. Only these two funds only I have.
Okay. Manoj, your thoughts?
Yeah, so Mr. Kumar, what you have chosen earlier is two close-ended funds. One is a marginal equity fund, which is a hybrid fund with a 15% exposure to equity. So that's your SBI fund. It's got a tenure of 3.5 years, and it's a replacement for a fixed deposit. So what returns you can expect for this kind of a fund is between 5 to 10%, vis-a-vis a fixed deposit, which typically will give you returns of around 7.5% at the current point of time. Ideally, we don't prefer close-ended funds. There are other funds which also can give you similar returns. We need to understand whether did you take it as a fixed deposit kind of a replacement. And the other fund that you've chosen, the HDFC fund, is a thematic fund which focuses on the housing opportunity. It's 100% equity. Again, but it's a close-ended fund. So you have chosen two extremely, diverse kind of funds. What I'm trying to tell you is that there needs to be a little more thought into your portfolio construction. One fund is a pure fixed deposit replacement, and the other is an extremely high risk fund that you have chosen. We don't believe that this kind of a portfolio construction will add a lot of value to you. So you need to first think about how do you want to construct the portfolio. Now, coming to your specific question now of investing fresh funds. We believe that the way the markets are poised, and there has been a significant corrections in mid caps and small caps that's there. In the last 1 year has seen almost small caps and mid caps falling by almost 25%. So from January till now, most of the funds will be down between 20 to 25%. If you want to start investing, this is a good time to start investing, but you still need to stagger your investments into mid and small caps and have a clear view that you will invest at least for the next 5 to 10 years and want to hold them for such a long time. In the short term, there could be a little more pain in the mid and small caps, and hence the reason to suggesting you to stagger your investments.
Mr. Kumar, what is the goal for which you are investing, sir?
I want for the investment purpose only. These two are investment purpose only I have taken.
Okay, and for how long are you looking to remain invested?
I can put it for another 5 to 10 years. That is not an issue for me.
Manoj?
Yeah, so your tenure is definitely right at this point of time. I would suggest that instead of putting both the further exposure into only mid and small caps, you should maybe choose one multi-cap fund and one mid-cap fund and then balance out the risk in there, and that should be better for you.
All right, Mr. Kumar, I hope that works for you. Up next, we have a query from Mr. Mukund Deshpande. He's written to us from Mumbai. He's retired. He's 60 years old. And this is an interesting query, Manoj, because he has an ongoing SIP of 5,000 rupees in the DSP microcap, I think now the small cap fund, right? He's been doing this for the last 2 years. Obviously unsatisfied with the returns. He has an investment horizon of 5 years. He wants to know if he should continue or switch to a fund which could be moderately aggressive. So I'm not sure Mr. Deshpande has a portfolio or if he has actually chosen the small cap route to fulfill some goal actually which is there in the next 5 years. Yeah. So what would you advise him to do?
So per se, the DSP small cap fund, which was earlier known as the micro cap fund, is a extremely well managed fund managed by Vineet Samre. It has a portfolio composition of around 65 stocks. It balances risk quite well. And if you look at the last 5-7 years, it is one of the better performers. But in the last 2 years, it has not been performing exceedingly well, and that is primarily timed along with that when it stopped its further inflows into the fund. Currently, also the fund takes more money only through the SIP route. Now, in this particular case, if you're just going to look at the last 2 years and doing a SIP in that, your returns would have been flat because you bought the complete rally, and so your average cost kept on going higher. And now, as the markets have started going down for specifically small caps, you need to average more vigorously out here. My point here is that, if you're 60 years old, retired, and if you want to do an SIP into a small cap fund, your horizon should at least be 10 to 15 years. If that's not your horizon, and I think in this particular case, it will not be the horizon since you're already retired, I don't think that's the right mix that one should look at. You should ideally move to a multi-cap fund or a balanced fund, specifically because your tenure is only 5 years, out of which 2 years are already gone by, so it's just 3 years left. I would suggest you should go to a ICICI multi-cap fund, which is more stable in nature, or the Mirai India Hybrid Equity Fund, which is a balanced fund. That should suit you more better.
Okay, up next we have a query from Arun Yadav. He's written to us from Gujarat. He's 30 years old. He is looking to start fresh investments. Hi Arun, how can we help you?
मैम मुझको पर मंथ 20,000 का इन्वेस्टमेंट करना है मैम, जो मैं पोर्टफोलियो में क्या लूँ उसमें मैम?
आपको कितने साल के लिए ये इन्वेस्टमेंट करना है और कोई पर्टिकुलर वजह है कि आप बताइए?
मैम मुझको 10 साल बाद मुझको एक घर बनाना था।
कितने साल में?
10 years मैम।
Okay, Manoj, this is a bit tricky actually and looks difficult to me. He has a tenure just of 10 years in which he's looking to build a house. Just one more question actually. Arun, आपको कितने पैसे की ज़रूरत होगी 10 साल बाद?
मैम 15 lakh.
15 lakhs. That seems too aggressive actually, Manoj. What would you advise him to do? I mean, at least he's on the right path. He's starting investing now, but 15 lakhs in 10 years at 20,000 a month?
Yeah, so first of all, let's look at what are the basic rules when you are doing an SIP. There are 4 basic rules we always tell people they should remember. One, when you're doing SIP, your horizon or tenure should at least be 10 years. Don't do an SIP for if your tenure is lesser than that, at least into an equity fund and, for the long-term wealth creation. That will not suit your purpose. The second is that one has to choose the funds in the portfolio construction based on a higher standard deviation. This is a significant thing you should remember because when you're doing a lump sum investment and for the, 5 to 7 years tenure, you should ideally choose funds with a lower standard deviation because you want the volatility to be evened out. But when you are doing an SIP, you want a higher volatility fund because that's when averaging will work if the volatility is higher. Third thing is that have a mix of multi-cap funds and mid-cap funds kind of a scenario, more weightage on multi-cap funds. And the fourth very important factor is that when you're choosing 3 to 4 funds for your SIP, each of them should be a different investment style. Now in this case, you are he's investing 20,000 rupees a month. That's 2.5 lakh rupees every year. Over 10 years, his investment itself will be around 24-25 lakhs. And his goal of 15 lakhs, obviously, in fact, if he just puts the money into a fixed deposit or a savings, can also be met easily if he's able to save 20,000 rupees a month. However, if you want to go through the process of wealth creation, 10 years is a good time frame you're looking at. I would suggest that, you should invest it across 3-4 different funds. As I said, put into the ICICI multi-cap fund, Kotak Contra fund. Those two will actually, be the funds which will help you grow the corpus on a conservative basis. The third fund we also recommend is the Aditya Birla Sun Life Advantage Fund, Equity Advantage Fund, which has a higher volatility that you are looking at. And you can add a thematic fund to that. So you can have a mix of these 3-4 funds, go in for a tenure of 10 years, and I think your goal should definitely be met.
ओके अरुण, आपके लिए राय यही है कि जो 10 साल का आपने टाइम अपने लिए निकाला है वो बहुत अच्छी बात है, कम से कम 10 साल होने ही चाहिए। आपको ऐसे फंड्स चूज करने हैं जिनमें स्टैंडर्ड डिविएशन जो है वो ज़्यादा हो। एज वेल आप कुछ मल्टी कैप फंड्स लीजिए, कुछ मिड कैप फंड्स भी ले सकते हैं, लेकिन आपको अपने फंड सिलेक्शन में ये ज़रूरी ध्यान रखना होगा कि उनका इन्वेस्टमेंट स्टाइल सबका अलग हो। काफ़ी नेम्स जो हैं वो फ्लैश कर रहे हैं। मनोज ने जो रेकमेंड किया है उसमें है मोतीलाल मल्टी कैप 35, आदित्य बिरला इक्विटी एडवांटेज, कोटक कॉन्ट्रा फंड, डीएसपी मिड कैप फंड, और अगर आप चाहें तो एक थीमेटिक फंड भी उसमें डाल सकते हैं। बट ऑल द वेरी बेस्ट फॉर योर investment journey. Okay, up next, a query comes in from Mayank Sehgal. He's written to us from London. He has investments in multiple funds and he wants you to assess his portfolio. So he's only 35 years old right now. He has ongoing SIPs in the Franklin India Dynamic PE Ratio Fund, ICICI Pru Banking and Financial Services, Reliance Small Cap, L&T Infra. Okay, he has a time horizon of between 10 to 15 years. Now, he has three very pointed questions for you. One is that the Reliance Small Cap and the L&T Infra, two funds that he's not very happy with. So, he wants to know if he should continue his investments here. Next, he wants to add on yet another sectoral fund. Okay, so he already has two sector funds. He wants to know whether something else will work for him. And thirdly, he wants to increase his SIP amount, and therefore he wants to know, should he add it to a new fund or perhaps just continue with, one of the 2 or 3 here?
Yeah, so, the focus of the entire portfolio is clearly that he wants to build a high risk, high return portfolio. Doing only a sectoral approach at most of the times is not the right strategy. But if you've decided that's the way you want to take it forward, this is really going to be, a little bit of a game where you need to monitor a portfolio more carefully. Coming to your specific questions, whether you should continue with the L&T Infra and the Reliance Small Cap Fund specifically because they have not done well in the last, 10 months or maybe slightly longer, 1 year also. We believe those are themes, which will play out significantly well. The Reliance Small Cap Fund is an extremely well-managed fund. The L&T Infra Fund is managed by Somendranath Leru, who is the CIO, and he's been an expert in managing the infra stocks and specifically the mid-cap. So both these funds are mid-cap oriented. One of them also has the thematic orientation. The L&T Infra has a very high weightage to the construction, manufacturing sectors, which have taken a beating. However, our view is that infra as a theme is going to take a secular upturn in the next 5-10 years, and hence we believe you should continue with both these funds. So that's question number one. Question number two is that whether you should add another sector to it. When you're looking at a sectoral approach in investing, one of the key things you should look at is that whether that sector is going to be a secular, going to see a secular uptrend in the next 5-10 years. You have to think in terms of decades, which very few people can do. Given the India story, the consumption theme is such a strong theme that we strongly believe that for the next decade also it will do well. However, some of the stocks out there are slightly overpriced at this point of time. So in the short term, that may not be the right thing, but over the 10 years, we believe the consumption theme will continue to unfold and create wealth for investors. And the pharma and healthcare sector is a little cyclical. You have seen globally also, there are longish periods of time when these kind of sectors don't give returns, but over the long term, you can, make returns. So that's another sector you can consider and put some money into it. And the last question that you're looking at, should you add another fund? Well, you got a, bucket of 3-4 funds already, which is perfectly balanced. The only one, anomaly we see in your portfolio is the Franklin Dynamic PE Ratio Fund. That just doesn't fit into your portfolio because you want to take higher risk, and that's an extremely conservative kind of orientation. So you could replace that with another thematic fund, which could be consumption or pharma and healthcare that you could decide on.
Here is a new initiative from our end. It's a beginner's guide on mutual funds, everything that you have ever wanted to know. So this is a 50 episode guide on basically how we can simplify mutual funds for all our new investors. So in the very first one, here's a look at what an AMC or an asset management company means and what it does. Take a look.
Is that how you're passing your time today, Sumera?
Yeah, but I'm kind of stuck now.
Okay, it's my turn now. AMC.
Oh, not bad. So I was just trying to creatively kill some time, but I think AMC is what you're always thinking about.
Right. Well, asset management company is the place where the fund house decides when, how much money gets invested of the money which is pooled from individual investors.
Wow, so I don't envy the job of a fund manager. You have to manage this entire pool of assets and then you have to decide where to put that money.
Correct. The objective, in fact, the main objective is to make sharp, lucrative investments to maximize return for investors, keeping risk in mind.
Well, maximizing returns and managing investors' money, that's a big responsibility. But Feroz, I've always been curious to find out what actually goes on inside an AMC. How are things actually done?
Just like when you buy this puzzle, you get a board to play on, you get 100 letters, you told that 2 to 4 players can play. Similarly, every mutual fund comes with an objective and a theme pre-decided. And the fund manager, when he takes decision, he does thorough research before making any financial decision and also makes sure that the team is on the same page.
All right, so that makes sense. So if I have to select a fund, I look at the fund attributes, I'd look at the credentials of the fund manager. Besides these very obvious ones, what else should investors look out for?
The team size, the number of analysts it has, how many years of fund management experience does the asset management company have, what are the total assets it manages, and the fee structure. All this put together becomes my input to take a decision.
But Feroz, there is always this misconception that AMCs are not as reliable as banks, especially in the minds of retail investors. I mean, they do come under the purview of SEBI, Reserve Bank, Finance Ministry, but not everyone is aware of how tightly regulated AMCs are.
Sumira, of course they're very credible. We've spent years and decades of the asset management company or the mutual fund companies in India. They're regulated by SEBI. There's a checker and maker concept. There is a registrar. There's a custodian. It is a trust format which gets created. So I personally think that it is a very safe platform.
Well, there's no doubt about that. So there are no loopholes. AMCs are about as good as they come. It's a good place for you to park your money and let compounding work for you. Well, Feroz, thanks very much for helping me with my puzzle and for helping us understand what AMCs do.